The economy is clearly under attack, and this video is for everyone who owns a business or you're an employee and you're working for someone else. At this point, it's quite obvious that we are entering into a recession phase. Due to the current situation, people are losing their jobs, there's a salary cut happening, and people have been asked to take even unpaid leave. And globally, people are going through a really tough time. Data actually says that we might be entering into a really bad recession if the current situation actually continues. Literally everything is under lockdown. So this video is more of on how to actually protect your money, small advice on what you can do during this recession period, and where can you invest during this crisis with so much of uncertainty, and most importantly, what you and I can do to protect ourselves during this situation. We might see the unemployment rate increase over the next coming weeks. So we're going to discuss all of that in this video. I was just going through LinkedIn, and the number of messages or the number of posts which people have been putting lately in regards with salary cuts or searching for jobs is quite crazy. Quite unfortunate to see how the economy is actually shaping at this moment. So it's quite important that you take very calculated and careful steps in regards with your money. Now, if you don't have money, the last thing that you should be doing is investing. And this is a personal opinion. People might be saying that you can invest in so many places, but if you're running low on funds, then please don't invest. Stock markets are very volatile. Real estate is hard to invest in due to the lockdowns. You can't even go and visit properties. You should rather focus on saving some money and building up your emergency fund. Normally, it's suggested that you have at least 6 months of emergency fund with you, which will cover your overall basic expenses. So that should be your first priority. Only then you should start thinking about investing. There is no certainty on how long this entire epidemic can last. In case you don't even have an emergency fund, cut down your expenses. Use some app where you can track your expenses as well. I personally use Spendy, a great app on the App Store. You can check out that app for tracking your daily expenses. No matter which country you are in, I'm sure there will be some sort of relief program at this stage which you can take benefit from. Remember that every company who has been laying off has to pay a mandatory gratuity as well if you have finished 1 year with the company. So even the companies are trying their best to not to lay off people. Second is in regards with your current investments. Now that you have a little bit more clarity on whether you should invest as per your balance in your account, these are few things which you should avoid now. Now most of us we will have a small amount of our monthly saving in mutual funds. Now, when you look at your mutual funds right now, it might look very scary. My funds are down almost by 27 to 30%. Everyone's funds have taken a big hit because the markets have crashed. Sensex and Nifty are down almost 30%. They are recovering slowly, but their current levels are what it used to be almost 2 years ago. And if you have invested like me in small cap, that's currently trending almost negative 40%. So if you have also invested in small cap funds, don't worry, I'm pretty much in the same boat. So people who have invested maybe 7 years or 10 years ago, they will end up seeing their investments cut by almost half. Quite scary to actually see that since you invest with an expectation that you will get around 10% return when you are about to retire. And now you just see your entire fund becoming half. Now people are wondering if they should be selling their mutual funds right now and exit the investment. Please don't sell any of them. That would just be a terrible idea. Eventually, there has to be a cure for the vaccine. This can't continue for years. Once that happens, and the stock market will recover just as quickly as it fell. And if you actually have been listening to podcasts of great investors, they keep saying how they invested in 2008 recession or the recession before that. Normal people they get worried and they end up selling, and the rich kept buying all those investments and all those opportunities for super cheap price. So don't do that. This is when all the smart investors they're just waiting to find the perfect price when the market hits the bottom, and huge number of average people like you and me we will end up panicking and we exit from the investment. The same trend happened in 2000 and in 2008 recession. So don't be that guy who will end up panicking and selling your investments to the rich for cheap. A lot of people during economic uncertainty they try to run away from investments from the stock markets, But this can actually be a time of opportunity. Maybe if you haven't invested in the past or you were quite hesitant, take this opportunity to actually learn and understand how the different investments work and then invest a small amounts accordingly. If you want to invest in the stock market, do paper trading daily where you don't actually use your actual money but virtual money. Learn how to analyze charts, learn how patterns work. There are a lot of different paper trading websites as well from where you can actually learn and start small. Think about it. After the dot com bubble, the markets did come back. After the financial crisis, the markets did come back as well. Even after this, the markets will come back. It might not recover in 2 months, might not recover in 1 year, maybe 5 to 6 years, or maybe even 10 years, but eventually the market has to recover. And this is why investing into strong companies is essential, as these companies will be able to sustain themselves during this entire period. And this brings up the next point, which is if you do have the required funds and you are looking to invest, I would definitely suggest investing into good companies at this point. Go through the company's balance sheet to understand how much liquidity and how much asset a company actually have. If you want to know more about balance sheets, I have a separate video as well which explains step by step on how to read and analyze a balance sheet. You can check out that particular video as well. Also considering the market is little up as compared to what it was 2 weeks ago, I would definitely suggest going through the companies where you have previously invested. Try to understand if they are actually valuable companies. If they're not, I would personally take out the losses, exit, and then invest that amount into strong fundamental companies, which will sustain during this entire recession. At least that way, I'm just ensuring that I will minimize my overall losses. Issue is none of us want to make a loss. So if you have bought a stock for let's say 100 rupees and it's currently at 50 rupees, we don't want to exit that position purely because we don't want to make a loss of 50 rupees. But what you need to understand is that even the good companies are currently trading at low prices. Example Reliance. The stock was previously at 1400 rupees range and I bought almost 500 shares of Reliance 2 weeks ago when it was trending about 890 rupees. So why not invest your money into good companies? Because when the market starts recovering, definitely the companies which have strong fundamental and strong balance sheets, they will definitely recover faster as compared to your small cap companies. You also need to check the unemployment rate and keep a track of this. This is a key metric which you need to keep attention in. If this continues to climb up as a result of all the shutdowns and it starts affecting more and more states, the more people start losing their job, which I really hope they don't, then the stock market will take more time to recover as well, regardless of what RBI tries to do. So all this leads to the main point that if you don't have an emergency fund with you for the next 4 to 6 months to cover all your expenses, then please stop investing because nothing can be worse than you not having a basic fund and the market continues to crash as well. Next would be to be very careful of the current scams happening all over. There are so many scams happening right now because scammers know that because of the lockdown happening all over, banks' response time has drastically increased. Not just that, also because of the lockdown, you won't be able to visit a bank as well. So if you have someone reaching out to you, maybe acting like a bank, saying it's really urgent, or if it's asking for your login credentials upfront, then you might want to rethink and check a little bit more on that. People are getting messages on WhatsApp saying it's from the bank. Sometimes even calls saying to provide the OTP once they have confirmed the bank account details. Please don't share these details over the phone. As a small mistake can lead to you losing a big amount of money. And under these circumstances, it's really hard to actually put up a complaint. Also, I believe that this can be a great opportunity to improve your existing skills. So, if you're someone who is in the coding and software industry, probably do more courses and improve your skills there. I personally work in the e commerce industry and I've been doing a few business and analytical courses and courses related to the e commerce itself. Since everyone has the time, I truly believe that if used well, once you're out of the recession period, you will be worth much more, considering you would have enhanced your skill in a small way. This might also lead you to think what can be the optional sources of revenue which you can build during such cases. Last suggestion would be networking. Try and build relationships during this period. Network with more and more people. Everyone's at home and everyone's in the same boat as you. under the current situation, it's quite complicated on how to even look for opportunities. I think right now can be a great time to connect with people and making sure that you grow your network. LinkedIn can be a great platform for that. Now, I'm not saying go on LinkedIn and keep adding people left, right, and just keep spamming people. That's not what I mean, but try and understand what's your intent behind actually networking. Me personally speaking, I'm in this dilemma where I'm just trying to figure out whether I should do an MBA or not, or whether I should be going for higher studies. Is there a value for it? Is it worth the investment and time? And for that reason, I've been reaching out to industry experts and people at much higher positions for advice. And you will be surprised by the kind of responses you will get. So people are willing to help you out. It's just your choice if you are willing to take that extra mile and take that extra effort as well. So with that said, you guys, I do hope you guys did get a basic knowledge on what you can do during this stay-at-home recession period. And if you did get value from this particular video, it would be great if you can smash the like button and subscribe as well. I'm quite positive things will get back to normal soon. And until then, stay at home, be safe, stay healthy. So with that said, see you all in the next video.